We've got Larry Shover joining us, CIO at Efficient Advisors. So Larry, once more, here we are talking about a yield that remains suppressed. Is this about markets being down today? Is it about prepping ahead of an even more dovish Powell on Wednesday? Tell me what you're looking at.
Well, I think the market definitely due for some type of thematic turnaround, and which way it is, I mean, it's anybody's guess. I mean, right now, you're right. The 10-year yield has been stuck between 280 and 255 for the very longest time. And I think we're seeing some buying due to kind of buy the rumor, sell the fact, the FOMC. But it seems like most of the action is in the 2 and the 5s as opposed to the 10. The 10's putting us all to sleep.
Yeah, I think it's a great point this morning, and we had some auctions. We had 2 years. We had 5 years. 5 years seemed to be pretty mixed, as did the 2. I'm curious if you saw anything noteworthy in the auctions. I know last time we spoke, we were coming off a pretty soft, what was it, the 10-year auction we last talked about, Larry?
That's right, exactly. It was a 10-year, and today the 2 and the 5s both were very well bid, did very good, especially the 2-year. You know, non-dealer bidding was like 72.5 compared to like a 42% 10-year average. And a lot of people are scratching their head and saying, what's going on? And I really think a lot of people, it's two things, people buying the rumor or thinking that we're going to have a dovish Fed FOMC meeting on Wednesday, buying the rumor, getting ready to sell the news. And also, we have to keep in mind that primary dealers are holding record longs on their balance sheets. So that's something. In my mind, I think the turnaround is going to be a disappointing FOMC message in that, you know, Jerome Powell, in my mind, is going to say we're going to have somewhere between 0 and 2 rate hikes in 2019. And as of this morning, I think the one yield, the one hike was priced at maybe 20%. But that being said, I think the front end of the curve, especially the 2s, have room to run. I mean, they're trading 40 basis points under their November peak, and wouldn't be surprised to see that, you know, yields rally, taking the 210 spread, maybe even testing that 9 basis point low. Right now it's about 14, but I think that's the play right now, and that's the play I have on.
So you're thinking to basically play continued flattening of the yield curve through rising yields on the short end, Larry? Am I right?
Yeah. I think it's like the path of least resistance for me. I mean, I think about the 210 closed around 14. The 2-year is 40 basis points under its November peak, and I think it's got some room to run, even if the Fed doesn't overly disappoint. But I think they're going to end up disappointing, even though Powell's got a lot of room to say, like, hey, we don't have enough data to judge where this economy is. But I do think he's going to have to message that there's going to be, you know, rate hikes aren't completely off the table.
Totally. Larry, I think you've got great logic on this, and it's something that we've been talking about quite a bit here. So I want to try and break it down just for those following at home. When you talk about a disappointing Fed message, that equates to basically anything beyond perfectly dovish. You're not getting rate hikes, guys, in the stock market. Don't worry from Powell, right? Because we know markets have rallied.
Yeah, exactly
On their interpretation of a dovish Powell. But your point is, look, the data, by the way, if we bring up the economic surprise, we're in positive territory again, Larry, after some slowing of our beat rate. We're now beating at a positive rate for our economic data, but yet the market has basically put 2 hikes totally off the table. And to your point, 1, maybe like a 20%. That's not what we're getting from.
Yes.
That's not what the Fed has told us to expect.
Yeah, and just keep in mind, like I think it was 2 weeks ago, the market was pricing in like a half of a rate cut as opposed to that. So we got 20% of one rate hike, and I think the market might be overly dovish, or thinking that the message will be overly dovish, and I do think he's going to continue to tone it down. That said, I think, you know, I like to put on trades just like in options. You know, when you have optionality, you try to put things in your, at least a little bit more in your favor. I mean, it's never in your favor, but a little bit more. And I think when I look at the 2s and say, wow, they're really, you know, 40 basis points under their peak. I mean, I think it makes sense for the curve to continue to flatten, and the loss to me isn't going to be all that great.
Okay, so then the last point, just to connect our discussion about the Fed event to your trade, which is even if Powell is interpreted as the market as being somewhat more hawkish, it's going to show up on the short end, the Fed-controlled end, maybe the 10-year to some extent too, but the sell-off in bonds and the rally in yields will be disproportionately affected, in to your mind, the two. What about the 5? Is it going to go out that far?
No, right now I just a lot more. The 210 is more compelling to me. I definitely trading the 5.7, but that's just more of a risk management trade than anything else. It's really the 210, fully well acknowledging that the Federal Reserve actually looks at the 3-month 10-year, not all these other curves. But I think that's the one. It's a risk-adjusted trade in my mind.
I think it's a great point, Larry. I'm looking at the IRX teller rate right now, and it has flattened out for the first time in quite a while, right? It's basically been moving sideways now for several weeks. Larry, awesome stuff. We got to leave it there. Love the conversation, Mr. Shover. We will catch you later in the week, I'm sure. I know you're going to be busy, Larry, around that Fed day. Okay. Larry Shover, of course, the CIO